Okay. Everyone, I think we are streaming now.
Good.
I think we're good.
All right. Thank you, everybody, for coming to the meeting here. We are back live here at 4:16 p.m. Roll call, we have Joe, Lance, myself, and Rita. On the item first here was discuss and compare health insurance bids presented for plan year 2026. I have been, I think, corrected that I don't know that we have bids with an S. I think maybe we only have one bid and one renewal is what we're looking at. Mr. Filbert, is that correct, that we're only looking at a bid and a renewal? It's not really considered two bids?
That's my understanding, yes.
Okay. And then where I had planned on trying to do a comparison of what our current benefits are in pricing compared to what the bid was from an outside source through Blue Cross Blue Shield. And that's what I have in here, discuss and compare health insurance bids. I see that some representatives from Snedeker Risk Management are here. So I would go ahead and open the floor to them to go ahead and explain a little bit about the Hope Trust, the renewal that they presented, and what information they'd like to make us aware of. So.
Is there a microphone right over there at that table?
Yeah, you can come.
Or I can just stand and talk to
Well, I think it records better if it's. Yeah, I'd say have a seat there. And
Just have a seat there. Oh, good afternoon, everyone. My name is Eric Snedeker from Snedeker Risk Management Insurance. We have had the honor and pleasure of working with the county for, okay, yep. We're going on probably close to 30 years now in one capacity or another, both on your property liability and your work comp. Prior to joining the Hope Trust a number of years ago, you folks were partially self-funded with your own self-funded health plan that worked very, very well for many decades. But we had also, during that time, got a number of counties and public entities to go together and form the Hope Trust Health Option for Public Entities, which essentially the Hope Trust is a self-insured risk pool, specifically for health insurance. So collected entities pool their premiums, create a health insurance plan, pay claims out of those premiums. The benefits of, instead of being like you folks previously were, where it was just the Pike County self-funded health plan, is we know groups of all sizes, but especially a group of 100 or so members, you're going to have good years, you're going to have bad years. There can be a lot of fluctuation. So with our clients being public entities, we know how important the budgeting process is and to keep rates and keep costs stable from year to year if at all possible. By pooling counties, cities, villages, schools together, we can make those rates a lot more stabilized so that you're not facing 30, 40% renewal increases. It's always been our goal to keep those as manageable as possible, generally less than 10% per year. And generally, we've been successful at doing that. Since the county joined the Hope Trust, I can pass out some of these. I don't have copies for everybody in attendance, but I'll share with you gentlemen. And feel free to make copies. It's a public document at this point, and you might already have it. Okay. Just showing kind of how the contributions and the claims have worked over the years. this type of loss history, this is kind of explaining insurance in a nutshell 101. There's always going to be givers and takers. We're always going to contribute our funds collectively. Analogy with a homeowner's policy, we're all going to chip in thousands of dollars per year to our home insurance carrier. Luckily, not all of our houses are going to burn down or have a roof blow off, but with some people it will, and they're going to have very heavy loss ratio years. In Pike County's case, many, many years, the county received more in benefits than what was actually paid into it. However, we executed what the founders of the Hope Trust and all the members of the Hope Trust have instructed us as the program managers to do. Hey, we're like-kind entities, we're public entities, we're in it for the long run, we're in it together. Let's not come back with 30, 40% rate increases like your large national fully insured for-profit carriers, your United Health carriers, your Aetnas, your Blue Cross Blue Shield, your health alliances prior to them exiting the marketplace. So as far as a return on investment, I think we can demonstrate it's been very, very good for the Pike County members. The Hope Trust initially was just 4 counties that founded it about 15 years ago, had about 165 covered lives when it first started. Today, it's over 30 public entities made up of the counties, the cities, the villages, and the schools, over 5,000 covered lives. The members have made an extremely strong, financially solvent organization. We established direct contracts with the carriers. We work very closely with your hospitals, the providers. Our rates on average are double digits less as far as the discounts go. They allow the Hope Trust members more. We definitely remind our hospitals and our providers that we're working with, hey, we're insuring, teachers, we're insuring firefighters, police officers, corrections officers. These are public servants. If you ever are going to give someone a deal, give it to the Hope Trust, and they have. And our discount rates that we get are very, very good. That has allowed us the option of setting up a preferred provider program to where your members go to our preferred providers, such as Blessing Health System, Quincy Medical Group, Springfield Clinic, the entire HSHS Health System, St. John's and all their physicians. Minimal out-of-pocket, if not zero out-of-pocket for their spend, because those organizations give us such great discounts. One thing I would like to clarify, I know Mr. Ross, you've addressed in other meetings, is our HRP plan and how you didn't feel that was a benefit of the Hope Trust. I can say publicly recorded for the record, the HRP is the greatest cost savings to every single public entity that participates in the Hope Trust, including Pike County. Essentially what that is it is taking individuals, employees, their spouses, maybe their dependents, that would otherwise be on your plan, that would be on your major medical coverage. And if they have the option to get covered somewhere else, we make that a win-win, both for those individuals by reimbursing their out-of-pocket, but more importantly, for the Hope Trust as a whole and the county, because when you have someone's major medical insurance on your plan, you can imagine what the liability is for that if someone were to have $50,000 or $100,000 in care. So many of the individuals on that HRP, those are individuals we've identified that are going through adverse medical events. They are looking at having very high cost medical care. They're on very, very high cost drugs on a maintenance. It's not for 1 or 2 months. It could be for the rest of their lives. We've identified them. We've sat with them one-on-one, and we have let them understand what the HRP is. They are comfortable with us. They allow us to assist them and move them to an alternative plan, and we make it a win-win. Annually, the Hope Trust sheds millions of dollars in liability from our direct losses by working with these individuals to put them on another plan. So I've heard it termed, well, that's not health insurance, we shouldn't have it. I can assure you roughly 10% of your census, 10% of the folks that participate with Pike County for insurance are covered under the HRP. Almost every single one of those individuals, if that were to go away, they are going to bring their major medical health insurance back to the county because the option exists most frequently because we've worked with them to put them on that alternative plan. If it doesn't exist, they bring their major medical right back, which is kind of a double whammy. They're going through very high costly, very stressful medical care that we're helping them out with their out-of-pocket, but they're going to bring those expenses back onto your major medical plan, which will be directly affecting your loss run. Instead of us finding them another home, helping them out with $5,000 a month out of pocket, now they're going to be back on our major medical, and many people do have $100,000 worth of care in a year. We had an individual last year that had over 7 figures, had over $1 million. It happens, it's health insurance. But we save your taxpayers a tremendous amount of money by that HRP. So please understand, that is a good thing to have. We would not want to ever consider dropping the amount of people. We are constantly looking at new individuals that would be well suited for that. The Hope Trust as a whole, like I told you, it's grown tremendously. We have continued to expand the services that we provide. With our in-house clinical team, we work with individuals, navigating them through healthcare. It's no fun. We saw the headlines with the national carriers. We know how stressful navigating health insurance is. We still strive day in and day out to give that down-home kind of TLC to your employees while at the same time providing cost stability. You can see the numbers in front of you. Yes, I am a salesman, and I'm very proud of what our company does for the public entities we work for, but those numbers in front of you don't lie. And I think everybody should realize, name any of them, United Healthcare, Aetna, Blue Cross Blue Shield, Health Alliance, never in a million years would you have those loss ratios like that. Don't get me wrong, you can blacken the eye of a health insurance carrier. That's how health insurance works. In 1 year, it happens. You're going to pay the price dearly at renewal. You're going to get a large double-digit increase. The Hope Trust, which is, again, the public entities working together, we've eliminated that, gentlemen. We have taken that out of the equation and brought you, products and renewal figures that have made it very, very manageable. So we truly appreciate, the opportunity. We've worked with you for years. We want to keep working with you for years. I think we do a heck of a job for not only your employees and your dependents, but the taxpayers. And I've heard that said multiple times. And I'd be happy to answer any questions you have for coverage on the employees that work here, or questions that have to do with your taxpayers. So I appreciate that, and we look forward to our continued relationship.
I don't know if you're going to had planned on explaining it. Could you talk about the reimbursement or the credit, the dividend you're planning on issuing if the policy is renewed?
Yep, absolutely. So one of the benefits with the Hope Trust is it is controlled locally. We do, like any health insurance program, regardless if it's a for-profit carrier or it's a intergovernmental risk plan, you have to build surpluses. Even the organization as a whole, especially the organization as a whole, has to have money in the bank for when the bad years happen. From time to time, we as the program managers, ultimately the executive board, will say, we are doing good. Certain plan years, the claims have now all been adjudicated, and we're sitting on a healthy amount of surplus. And we now can show the appreciation and do a financial reward in the form of the dividend to the long-term members, based generally on the size that they are and how many years they've been with the Hope Trust. So this is not the first dividend that we have issued. It has happened on a couple of occasions, but this is the most recent one for every member of the Hope Trust in good standing. There's no catch with it. There is just a rule. It's for the members that are in good standing with the Hope Trust next year. So we have announced it. You've been provided the figures, but that's just essentially, we like to differentiate every way we can how we are different. than your for-profit insurance carriers. And you probably think I'm here demonizing the Aetnas and the, Healthcare Services Corporation, United Healthcare. I'm not, but their dividends go to their stockholders. Our dividends go back to the county. So, and when the dividend goes back to you folks, that is specifically, for you folks to use as you see fit. That is a return of taxpayer dollars when our surplus is at a point that the executive board said a portion can go back to the members.
And is this the first year Pike County's received the dividend?
That could be accurate because I know for a fact there was a dividend previously, but that may have been before Pike County joined the Hope Trust. This may be your first dividend. I can get you an answer on that and tell you, but I think it might be.
So I'm going to ask again, is the Hope Trust different than an insurance company? And I say that because I'm looking at the reports here. The first year we were with you guys, we got a 15% increase, then a negative 6 to 12 or something. Then it went up 4, then it went up 20, then it went up 5, then it went up 9, 14, 15, 9. I'm not seeing that stability that you're talking about. Why aren't we consistently at a 7 or 8%? I question your national averages of 30 and 40% increases or renewals for fully insured when I haven't seen that. I think the national average is closer to 5 to 7. And third, I guess the whole idea behind being part of this trust was that we were supposed to be getting discounted rates. But the rates that after having HRP, after getting people off the group and putting them on individual policies, after telling people that you're going to have to pay run out and all of this type of stuff, you're still higher than the fully insured market. And I don't see where the benefit is. I don't see where we're getting the benefit of being part of the trust as far as this discount or savings that you're talking about.
Well, I would say I don't think your 5 to 7% is accurate for any group that's running around 100% loss ratio or above. Not in a group above 50. If we're a small employer, community rated, sure, I am targeting the large groups, but your 5 to 7 of the national averages are folks that, entities that might be having that target trend that health insurance company is looking for, probably around the 75 to 85%. Yeah, I would give you, they might average 5 to 7, not the 100% loss ratios, not the, what do we got here, Mr. Ross? 107, 117, 115, 115, 96. Those would not be having 5 to 7. Those would be in that 20 to 40% range right there with that type. That's just way too much above what a fully insured would be willing to allow. So, yeah, on an average, if you're operating the way we hope you are in a perfect world, that could be. I can tell you our small groups have averaged over 7%, and that's with ACA community rating with Blue Cross. So, but I could give you maybe if you're running perfect, the average might be low double digits, but not if you're running, sir, at 100+% loss ratio. 5 to 7%, I would disagree. I know very few insurance, agents, producers that would say, oh yeah, you can run 100% loss ratio. Blue Cross, United Healthcare, they'll give you a 5% renewal increase. That's not going to happen. So as far as where our rates have kind of fluctuated, have been the years, and it's not just a Pike County thing, multiple entities, where if we did put our glasses on as a fully insured carrier would, we would be probably giving them a 20 to 30% renewal increase. And we try to dial that back, if at all possible, of let's do a 9 here. Let's do an 8 the next year. Let's try to, instead of swallowing that horse pill all at once, let's see if we can do it in increments, something that the county can budget. In addition, we try to give the benefit of the doubt. Any county, any entity, any employer might just have a bad year. A lot of people needed high cost care. We're not as quick to come back with the huge increases. That it's intentional that we have tried to smooth it out. But despite smoothing it out, we have had to give some increases. I feel they're very fair, they're warranted for the type of loss ratios that the county has sustained. And we continue to try to identify additional HRP participants to get it down even more. If we didn't have the HRP, your rates would be much, much higher, the loss ratios would be much, much higher. So I don't know if that answers your questions or you have any more follow-up, but that's kind of our idea behind the rate fluctuations and why we try to do it incrementally while we're working with you to find ways, working with your members rather, to find ways to lower the medical and prescription claims.
Okay, let's talk about your financial stability.
Sure.
So into 2023, you want to tell me the number you were at?
I do not have a copy of the audited financials here. You might have a copy of it at the end of the 23 year. You could probably quote it.
Well, of course.
Yeah. Yeah.
What, Mr. Shepherd, do you know what 2023 finished out for Hope Trust? About a negative $1 million?
It was a negative equity year. Absolutely.
Yeah.
And 24 was a positive multi-million dollars. In 25, we will be adding even more to that. And I'd be happy to comment on that if we want to go. I kind of feel like I'm being baited for negativity, but we can talk about it.
Well,
We're not looking to make money, sir, for the organization as a whole, 100% on the backs of the counties and the cities and the villages and the schools. Would we love if at the end of 23, we had 6 million positive in the bank, 10 million? Yes, that would have been wonderful. We were running heavy. We knew that. We had committed members that realized, hey, Hope Trust isn't a short-term solution. They're not going to come back and hammer us. They're going to continue to work with our members. We're going to take these rate increases. They're going to be warranted. Hence, we have to have enough money to pay the claims. And that was something we spent multiple years ensuring that the rates were sufficient to build surplus. And we're now there again. So yeah, we're there some tough years. The Hope Trust never once held claims at all. The Hope Trust was never planning on going anywhere. Those audited financials are a snapshot in time, as you know, on 12/31 of any given year, where it currently sets. And yes, at the end of 2023, it showed, a negative number. It doesn't anymore. In fact, it's growing positive. More members have joined the organization, and it's moving in the right direction.
and I don't disagree, but when you finish 2024 with a $5 million surplus,
Yeah.
but then you didn't establish a premium deficiency reserve, as where you just got done saying there is a premium deficiency reserve set aside, or that you're setting money aside.
Correct.
That's contrary to what your audit says.
Not the current audit, sir.
Well, 2024.
Correct.
So you haven't
They're-
filed 25s yet. So I don't know what that
Well,
says.
25 is not over yet.
Yeah.
So our financials are all internal until they are audited. They are internal, unaudited documents. But I am here to tell you, surplus has grown as of today.
Okay.
Could it all go to heck in a handbasket? Sure, it could. I don't anticipate that. I think 2025 is going to add with additional surplus to it. And when we've had individuals, members bring this issue up before, part of it, hey, if anyone wants to voluntarily take a higher rate increase, the Hope Trust as a whole would love it. We're trying not to do that. I say that facetiously because I know you're trying to save money on rates. I appreciate that. We're trying to make these costs sustainable. Everybody knows the rule of 72. We hear on investing all the time, divide your interest rate by 72. That's the amount of time it'll take the money to double. You can reverse engineer that for things that you don't want the price to go up. If something's going up on average, 20% a year, in 3.5 years' time, the overall cost is double. We are very cognizant that your health insurance costs are number 2 after your employee salaries. It is a huge line item. It's going to dwarf what is used in new vehicles and fuel, you name it. We're very cognizant of that. So it is a very thin line as far as ensuring that we work to maintain the financial strength of the Hope Trust while at the same time keeping the rate increases manageable. Our counties cannot take back-to-back 30 to 40% increases just so the parent organization can swim in more money and say we're that much stronger. Do you want the parent organization to be strong? Yes, it has to be. But we need to do that at a steady state, and we are. In 2025, we'll end with additional surplus to the Hope Trust as a whole.
Right. So you had a $5 million surplus or so in the end of 2024 and gave us a $16,000 dividend. Why wasn't there an extra zero on the end of that?
Well, ultimately, there were multiple options presented to the executive board. And as you can imagine, because you were giving me grief on how the financials ended in 23, the intent is not to give half of the surplus back that we built in that year. It's to recognize we're growing it at a good pace, but we can't give the lion's share of that back. We want to recognize members for their long-term commitment to the program.
Right. So
The counties and the cities, the villages, the schools should be proud, Mr. Ross, of the Hope Trust. It has provided tremendous benefits to the employees and their dependents in this room, and it has provided tremendous benefits to your taxpayers. I can assure you of that, sir. But we walk that fine line, as you folks do in making these decisions. But yeah, we can't just, because we have one good year, pay half of it back in dividends. That would not be appropriate. Not with the current level. In 10 years, it could be a different story. But I think the dividends were well thought out, and were a very good indicator of what could go back to the members.
So tell me about how you're projecting that if we were to leave, there's a $500,000 terminal liability expense on top of a $65,000 to $70,000 stop loss premium.
Sure.
So where is the $500,000 coming in if we're at a $80,000 specific deductible?
The $80,000 you're referencing is, I believe, the cost of the stop loss insurance if you elect to have stop loss for your terminal liability.
And that would be the $65,000 to $70,000 we would pay.
Correct.
Okay.
Correct. To answer the question on the full terminal liability, when the 4 founding counties founded the Hope Trust, they went into it because they lived through the Blue Cross. Many of them had large double-digit increases. They had experienced the 20s and the 30s, and they said there's a better way of doing this. They founded the Hope Trust, but they recognized that we're going to make it good for the organization as a whole. We're going to be fair with the rates. If there's ever members that decide this is not the long-term home from them, we recognize that. We shake their hands and we let them go. However, the IBNR, the incurred but not reported claims, their terminal liability, they will take that with them. The Hope Trust is not the only intergovernmental association that does health insurance that has done that setup, but it was a member choice. The members as a whole still believe to this day that that is the fairest way to do it. I would concur with that. I know we are the long-term solution for our members. However, I do respect if someone's going to leave membership. However, they will take their unpaid liabilities that haven't yet been adjudicated from their plan year with them. Now, you asked how the IBNR was set up. That's estimated right now. When a member provides us formal notification that they are ending their membership in the Hope Trust, late in the year, we will look at the previous year's claims paid to date. So we see kind of what they're running on a monthly basis. We know on average the claims pipeline, the length of time it is. Our staff also works with the actuaries that assist on estimating that. That is an estimated number. So let's just say it was $550,000 is the estimated terminal liability claims amount that's calculated. It's then divided by 12. Monthly invoices are sent to the member that leaves the Hope Trust. They pay those monthly invoices. At the end of the year, we find out we collected $550,000. The Hope Trust only paid out $482,096 worth of claims. we write a check back to that member because that was just an estimate. The 500 and some thousand in my analogy was just an estimate. We overestimated. The same would be true as well. If we estimated 550 and at the end of the year, it's called a true up. When we know what actually happened, these are actually claims that members of that county or city or village incurred up till midnight on December 31st. We send all the check registers of the actual claims, and it would be the exact number would be what is owed. So if too much was paid in on estimates, you get a refund back. If not enough is owed, more would be owed to the Hope Trust. So out of the 5,000 lives we currently have, we've only had a few members that accounted to about 175 lives total, to very small entities that had, I believe, less than 10 members apiece in one small county. All of them on the terminal liability, at the end of their 12 months of payments, I want to say all three got a slight amount back. I can tell you it was very small. We were very close. It's going to be a very close number, but it's an estimate, so we never know for sure. But we were very close. So it's not an adverse punishment or anything like that. The estimate that is calculated, there is specifics that go into it. We're looking at actual claims data from the most recent year when we come up to that estimate. At the end of the day, though, there's a true up that happens at the end of the year. So it's no longer off estimates. This is what the Hope Trust actually paid for your run out claims. So you owe the run out claims, win, lose, or draw. Your choice is that you have to decide, do you want to reinsure those claims? The Hope Trust, with their reinsurance at a $70,000 deductible, you have to decide for claims that roll in the door after January 1st, do you want them reinsured? What if a $250,000 hospital stay bill rolls in the door on January 10th? Do you want to be responsible for the $250,000, or would you have to say, hey, it's only going to cost us $70 because we did reinsure that? The Hope Trust reinsures their claims, of course, and most every member that has left has reinsured their claims in the case that there is a shock loss. But that is the only choice. So the IBNR is owed either way. It's the choice is, do you want to purchase, and I don't know if I have it right in front of me, but it is around the $65,000, $70,000 stop loss estimate.
But if I'm reading the language correct, it says if approved or if available. So even if we said that we did want to leave and take the stop loss protection, it kind of reads that there's no guarantee you'll give it to us.
I believe, and that is due to, and I will get you an answer, that the reinsurer has final say on if they are going to allow that terminal liability. To date, on any group, we've never had our reinsurer decline the terminal liability.
But there is a possibility they could say no.
I suppose there is. If it's in that documentation, that would be the case. I'd want to clarify with our in-house counsel and program manager, Jason Booth. I could get you an answer on that.
So I understand all the employees are here. I'm sure they're wanting to know what rates are going to be and all of that fun stuff. But I'm looking at this primarily as a finance issue for the county, a liability issue from the county. As I said, up until I actually finally got the audits and started looking at how severely deficient the Hope Trust was running prior to 25 or 24 here. And even then, it wasn't that you changed the model and said, well, now we figured out a way to get our claims under control. It was, we're going to start charging service fees for self-funded plans. So you've really kind of turned into a TPA.
We are a TPA.
Right.
Not kind of. We are the adjudicator of claims. We're a licensed
The
TPA
Hope
in the
Trust
state of
is a
Illinois.
TPA?
No, sir. Snedeker Risk Management.
But the Hope Trust is who's billing it. The Hope Trust is billing the service fee, correct? When you're sending a bill off to the school
Yes, the
district.
Hope Trust is the program, sir. So they would send the bill, and you only pay money to the Hope Trust. You don't pay Snedeker Risk Management any service fee.
Right, so the fees come out of that.
Correct.
What I'm concerned about is that we weren't being made aware as a county how badly the trust had been running prior to 2024.
I would not classify it as badly. Out of its close to 15-year history, there's a small number of years that were tough years. I'm not proud of those financials, but we worked with all of the member entities to right the ship, and it is righted to this day. But I would not
And
say.
to that right, the ship point is that if you go to a deficit again, it says that the rates are subject to change at the discretion of the exec board. So in the middle of the year, you could come to us and say, we're going to raise your rates because we are deficient. And there's not really anything we can do as a county. Because if we say, well, sorry, we're going to try and go quote with Blue Cross, the Hope Trust is going to come back and say, oh, sorry, you can't leave us unless you let us know September 1st that you're going to leave for a January 1 of the following year. There just seems to be the Hope Trust trap, as I call it, which basically we're trapped of getting out of the plan unless we want to spend 65 to 70,000 plus the potential of maybe $500,000 in claims, compared to if we were with a traditional fully insured product that, yes, maybe getting 9%, 14% increases, we wouldn't have to worry about any of this. If for some reason our employees were unhappy with what the insurance company was providing, we could go out there and quote it again and try and find somebody else and switch mid-year. We cannot allow that to our employees. If the employees aren't happy with the service, or if the rates come back to the county, or the Hope Trust's financials are out of whack, we as a county are stuck.
That's not accurate, sir.
How so?
You as a county are part of the Hope Trust. The Hope Trust is not controlled by thousands of executives in some high-rise office on the other side of the country. The Hope Trust is controlled by each member entity has a member on the board of directors. So as we sit here today, the Hope Trust is controlled by 30-some members that make it up. They are all internal, none are external. I don't sit on the executive board, none of our team does. And those members elect the executive board. Mr. Shepard happens to be on the executive board. So everybody gets a seat at the table as far as the board members. So you have 30-some of them. They collectively nominate an executive board, because those are the folks, as you can imagine, it's a large program. We need to bring the ultimate decision makers together 4 to 5 times a year to go over meetings, reports. Those are the individuals that are going to meet on more that day-to-day, quarterly basis and go over these things. But I would say it's completely inaccurate that the members couldn't do anything. Well, of course they could. It's your program. You have a seat at the table. It's 30-some individuals. And as far as the what ifs, we can talk about what ifs all day long. Sir, we had a very successful self-funded health plan here for decades. The Hope Trust has been in existence for a decade and a half, continues to add members. We can what if. We definitely can what if. I'm here to tell you the reality, that's not happened, and I don't think it's ever going to happen.
Right. So, but from an accounting standpoint and a budgeting standpoint for our county, we have to take into consideration the what ifs. And that's the problem that we're running into right now. So what if we have to come up with $300,000?
Sure.
How are we supposed to budget?
It's not a what if. Your IBNR, I'm a straight shooter. The optional thing is the stop loss reinsurance. I am a salesman, but guys, I'm a straight shooter. I joined insurance in 2010, came into the fame of the business. Before that, I spent a decade wearing the uniform, and the world travels got too much, so I had a change in career. So yes, I want to earn your business, but I am a straight shooter with you. The $500,000 estimate of IBNR, it's probably pretty accurate. It's very accurate. You would not just want to think that's a what if. That will be your terminal liability. Those are numbers are based on what we're already seeing the first half of the year. Once we get a few more months, we'll solidify it more, but it will be several $100,000. That's how the Hope Trust was designed by the members that founded it. Talking to what ifs, I'm telling you though, and that's what I'm trying to convey, what the county and the taxpayers have avoided. There is no way in Hades, gentlemen and ladies, that you would have this type of loss ratio and been spending what you're going to spend this year. It wouldn't have happened. Can I say that you'd be spending 3 times the amount on premium? No, absolutely not. But you would be spending, and you would have spent last year and the year before, hundreds of thousands of dollars more. I am wholeheartedly convinced on that just due to the numbers. The numbers don't lie. Health Alliance, United Healthcare, Aetna, they're not going to give someone rates when they're running 100% loss ratio. Many of these are publicly traded companies. You can read in their 10K what a reinsurer is looking for as far as a loss ratio, what a fully insured. It's not 100%. God forbid it's not 107, 117, 115. So with those what ifs, I'd like to balance it with a very important what if. This is what would have happened, gentlemen. The county today would be spending a heck of a lot more than the roughly 1.6, $1.8 million in costs that you're paying the Hope Trust, a heck of a lot more. So the IBNR is not it's not a way to handcuff anybody in, and no other entity has taken it that. They realize these are our claims. We're not just throwing a dart at the wall and going to make an uneducated guess and then we chisel that in stone. Like I explained, the true up is the true up. That will be what the actual claims are. If the IBNR estimate was high, you folks would get money back. If it's low, you would owe additional funds. But that's how the program was set up. The program was set up. We are going to protect everybody. It goes back to the insurance. My analogy, not all of our houses are going to have hail damage on the roof this year. Some of them will, but we're not all going to have to replace it. But what did we all do? We all wrote our homeowners insurance company several $1,000s. We all paid into the pot. But we got to make sure it's a strong pot because someone's going to need us. The Hope Trust was founded that way, that we are going to take care of every single member. We've never non-renewed a member, and we have always made our renewal increases manageable and continue to get in and try to find ways to move individuals to the HRP or alternative plans. So I know you're trying to make the Hope Trust sound negative, that we're,
I don't have to make it sound, the math proves it. But
I would disagree with that, sir.
well, you're saying that you saved us $400,000 over the traditional insurance, but then if we leave, we're going to have to pay $500,000 anyway. So I don't see where the savings is.
I think with these loss ratios, sir, we probably saved you several $100,000 for probably 8 out of the last 9 years. Your run out is a 1-year thing. So yes, do I think our savings that we've provided to the taxpayer of Pike County far dwarfs your amount of run out? Absolutely. Absolutely. It has been a great deal for Pike County. Gentlemen, take IBNR, it is what it is, a one-time, hey, we could have to pay $500,000. You guys understand the numbers. Look at what has been paid into the organization versus what has come out in benefits for claims in RX. That is unheard of in a fully insured carrier.
That's an insurance company.
Not year over year, sir. That's what, if you think that over a 9-year period that all but, 2 years were, over 100% loss ratio and you could get single digit increases, that doesn't happen. That doesn't happen. We were speaking here, and I'm not going to drop names, but we were working with a public entity in Southern Illinois several years ago. We still are working with them. We hope to earn their business someday. We haven't yet. And they interviewed us. They interviewed some of the Mr. Big brokers that came in and everything like that. And they're about 3 to 4 times your size. So a good sized group, several hundred people on their plan. And they ended up going with Blue Cross Blue Shield, biggest name out there. They ended up choosing a broker that 200 nationwide offices, 10,000 employees, Mr. Big, we've all heard the spiel. Year 1 of their renewal increase, Blue Cross came back with 40%. Year 1. And their big bad 10,000 employees, 200 nationwide offices broker went to bat for them, got it down to 30. Got it down to 30 right there. And that was considered success. I don't consider that success. The way the Hope Trust has worked with our entities and made this manageable. But my point is, I have no idea what that loss ratio was for that group. I can assure you it was probably around the 100 to 120% mark. You bloody someone's nose once, you're exactly right, Mr. Ross. That's insurance right there. No different than you could build a house, take out a State Farm insurance policy tomorrow, and they pay in $1,000. The day after that, the place burns down and they got to build you a new $700,000 house. You're exactly right. That's how insurance works. But on these health plans, you bloody the nose of a fully insured carrier once, they still want your business, but you're going to pay 30 to 40% more. And that's exactly what happened in that case. So that's why on the what ifs, I'm fine with that, Mr. Ross. I just like everybody to look at reality here and understand those numbers, those loss ratios, sir, those are not estimates. Those are really the loss ratio that Pike County incurred on the Hope Trust and never once got a catastrophic renewal increase. Never once were threatened with we're going to drop you from coverage like some insurance programs do. We've continued to work with the county. You folks are a valued partner in all this. You're a valued member of the Hope Trust. The Hope Trust doesn't want to lose you, neither does Snedeker Risk Management, but we got to keep this conversation in reality. Mr. Ross, we can what if this to death, but the IDNR, that is what it is. That was part of the way the organization was founded, sir.
I wasn't there. I don't know. So if we were to proceed forward, we could start getting lag reports. We could see the monthly claims. We could actually see how our group is performing. Because you're telling us claims are here. Apparently you can get the information. So we could be seeing it on an ongoing basis.
We do put the information together when it is necessary to give. We do not generate monthly reports for members. That is not a customary thing that we do. When we're required to come up with reporting, we will. There are instances such as when someone implies, hey, I don't know that the Hope Trust has been a good deal for our employees and our taxpayers. Yeah, we'll put some numbers together and show them, but it's not, something that we do on a regular basis.
Most large group insurance companies offer that on a regular basis. Why do you want to hide what our claims are?
Sir, we're not hiding anything. I don't know of a lot of insurance companies for a 100 life group that would send monthly reports. That's
Not send, they just log in and they can see it. So, but you may not work with other insurance companies. So and back to what I've been talking about as far as our claims and our risk and our liability, looking at how the money's being generated at the Hope Trust now, it still seems to be that the premiums aren't really fitting what the claims are, but you are making more money on the servicing fees, so that at least is getting you out of the hole. So
I don't follow what you're saying. Yes, we built surplus in 24, and I anticipate we will in 25. But it was a very necessary thing to do. As you pointed out, the 23 audit showed, hey, you need to get some money in the coffers for those bad years, and that's what we've done.
But what I'm saying is that you're not profiting or you're not making the money or keeping your head above water based off of running it as an insurance. You're keeping your head above water based off of billing an entity for self-funded claims and the administration. And so not everybody is participating in the pool, correct?
Not everybody is participating in the
For the
pool.
claims. Not all claims are being paid out of the Hope Trust pool. There are some entities that are sitting on their own. In fact, I thought that was potentially an option.
Oh,
we
for
could do.
ourselves, yes. Well, Pike County already has had a reimbursement layer, I believe this year, where there was a certain percentage of claims that Pike County wanted to keep internal. To lessen what we throw in the pot for everybody, we'll throw money in the pot for the big stuff, but for the little stuff, Pike County, any employer, I want to make sure it's for my people, my claims. Yes, we do allow that. We have self-insured options. We have other Hope Trust members that essentially are responsible up to the Hope Trust stop loss level, $70,000 per member. So we do have entities that have done that, that essentially use the Hope Trust for their reinsurance rates, all of their plan design, adjudications, and our network savings that are not out there with the big nationwide networks. But yeah, there's always the option if the county wants to look at options of saying, hey, we want to go back to being partially self-insured and we'll take that $70,000 specific deductible per member. We have multiple entities that are doing that. We could do that with Pike County.
Okay. So to sum up, it looks like if we were to choose to leave, we don't get $16,000. It's going to cost us between $65,000 to $70,000 to pay to leave, plus a possible liability of $500,000.
The 65 to 75,000 would be if you left and wanted to reinsure your IBNR claims. That's the purchase reinsurance. That's what that would be for. You don't have to pay the reinsurance. You could elect to not reinsure. But then we recommend any member that's left, and like I said, it's been very, very few. It is wise to buy reinsurance. The Hope Trust that's going to have 50 million of claims run through this year buys reinsurance. A single entity that's leaving would probably want that reinsurance protection. But that's optional. We would recommend you purchase it. But yes, you would be responsible for your IBNR claims. Every other Hope Trust member that's left has paid all of their IBNR. While we never want to lose a member, I'm not naive to think we won't in the future. I certainly and sincerely hope it's not Pike County, not this year, not ever. But yes, anytime a member leaves, they will be responsible for paying for their incurred but not reported claims.
Okay. That's all I got.
Derek, would you be okay if I just ask a question?
Go ahead.
If we were to renew with the Hope Trust, would the Hope Trust be willing to discuss some of the terms in the renewal agreement? I mean, for example, some of what Derek said about receiving regular information so we know more about what's happening. My feeling is, and this is just my perception, I'm not trying to place blame on anybody.
Sure.
And it may not be factual, it may just be a comedy of errors almost. But during the course of trying to shop around and look at other options for insurance, we've been trying to get information about our past claims and, history with health insurance, also getting information about Hope Trust. And it seems to me, just my perception, that we were not able to do that. And it's literally been months. Maybe we didn't know where to go to the right people or how to ask the right questions. But in the end, I feel like we didn't get the information we wanted. And if we could have regular reports from Hope, whether, I don't know what's customary in the insurance field, but quarterly, semi-annually, whatever, it just seems to me that would be helpful. And with computer programs the way they are, it doesn't, I'm thinking it wouldn't be that difficult. But that would just be one example.
Sure.
Another example would be the renewal notice timeframe. It just seems, and I think this is where we were, some of us just do feel like we're kind of trapped because we have that long renewal notice, and insurance companies are saying, well, we can't project what our rates are going to be that far out. So it does feel like we're kind of gotten ourselves into a trap there. And I guess I can imagine why the renewal notice timeframe that's currently in place is good for Hope Trust, but I don't see how it would be good for counties or municipalities. I just wonder if those are the kind of things that maybe we could discuss. The other thing I had on my list, which it sounds like you would not be willing to do, is the coverage dates. Until we started looking into Hope Trust and how things worked more, I was not aware that, if we had Hope Trust covering us from December 1 of 24 through November 30th of 25, and someone had a car accident in November, but they didn't get the claim in until after November 30th, that Hope wouldn't cover that. My insurance would cover that because of the date of when the incident occurred. Anyway, I'm not saying those are the only examples, those are just my thinking.
Right.
But would there be a possibility that Hope would be open to looking at some of those? The other thing, and I don't want to take up too much time because the committee's got to do some business here, but if you could just briefly talk about, I listened to what you said on the how each member has a seat and the governing board and all that. I know Jim Shepard is our representative, has been as long as I can remember, maybe always has. Could you, and I understand he's chairman now of that, is that correct?
Yes.
Could you explain what his role is, or anybody that would be in that position?
Sure. No, I appreciate the questions.
And that's two questions at once, sorry.
No, that's okay, and they're fair, they're good questions. First, my comment on your question is, in the future, would you be willing to do things such as, claims reporting, et cetera? Every year since the Hope Trust was founded, different member entities will have different questions or concerns come up. Sometimes it can be, hey, we have members that want to see this type of medication covered. Right now it's excluded under the formulary, whatever it could be. We always encourage our members to feed their questions or concerns to their nominated person on the Hope Trust board. Bring it to the executive committee. Those types of questions or concerns are discussed there. We advise what we feel our opinion on for pros and cons. But I can tell you, in the past, there were certain medical procedures that the Hope Trust previously didn't authorize. We didn't feel that they were necessarily the best to have for cost savings to the plan as a whole. But the members felt differently. And the member entities started feeding that up to the seats on the board, and they worked with us, and we did what the members as a whole and what the executive board, we guided it in the direction they were looking for. So to answer your question, can these things be changed? Anything can be considered by the Hope Trust ownership, which is every entity that makes it up. So I would fully commit that if Pike County has XYZ concerns and these things we would like considered to be changed, absolutely feed it up. Make your an explanation or case. Hey, we'd appreciate this to be considered. Yeah, send it up. I assure you, the executive board will consider it. And action to be taken. The plan, whether you're talking drugs, procedures, administration, which is kind of your question on knowing claims history and stuff, there's changes made to it darn near every single year. So it's constantly being guided and tweaked. So, absolutely, I could commit that we would be open to listen to the concerns. As far as the timeline of leaving, the Hope Trust is not a health insurance carrier. The Hope Trust is a joint self-insured risk pool, intergovernmental cooperation made up of the member entities. I know I'm on my soapbox again on that. The member entities know every year, as long as they've been a member for a year, they're going to have an understanding of the plan, they're going to have an understanding of the way that we operate. Most all of them have spoke to our team on multiple occasions. When we're planning on our upcoming renewal, you folks that are members of the Hope Trust know every single thing about the Hope Trust. You're already receiving the product. The only thing you don't know is what your renewal rates are going to be. So you're going to have all the questions answered. What's their provider list look like? Does their formulary for prescriptions work well with our employees? Does their customer service work? What are we currently paying? The only thing you're not going to know is next year's rates. So while I respect that a member might feel like, hey, we have to give notice of termination before we have firm rates from Blue Cross, United Healthcare. My point to that, you folks are already going to know our background. You've been with us. You've wintered with us. You know everything except for that 1 year renewal rate for next year. That's the only unknown. Our point, and the majority of the Hope Trust point, is if you want to leave, you better have a lot more reason than just wanting to know 1 year's rates. You know, so many of our current members have experienced the negative repercussions of those 30, 40% rate increases and that type of thing. The only thing you folks aren't going to know when you have to give formal notice of termination is the rate for next year. Everything else you have. So that's my answer to the concern. Will we have to provide a notice that we're leaving prior to when we can have firm rates from Blue Cross United Healthcare? That would be true, but folks, that's the only thing you don't have from us is the renewal rate. So God, I hope any member that leaves the Hope Trust, it's a lot more than just for 1 year of savings that somebody can come in and buy your business. I would hope that it's a lot more than that. You no longer want to work with other counties and cities and villages and schools. You know, for whatever reason, you don't subscribe to our way of thinking anymore. But by that deadline, you have to give the Hope Trust, the rates for next year are the only thing you would not have from the competitor. You will have them from us, which is another thing I want to comment on. We were founded by 4 counties. Most every county in the state has a 12/1 fiscal year. We realize that. It is very important for all of our counties, and I know Pike County can echo this, to get next year expense estimates as soon as possible. You folks right now are in the budget process, and we recognize that. I believe every single year, Hope Trust members have had their renewal rates prior to September 1 for a January 1st start date. The Hope Trust goes above and beyond with issuing those rates early. Fully insured carriers normally want to have 9 months of experience before they issue renewal rates. The fully insured carriers we work with do not issue renewal rates generally until after the first week of October, sometimes towards the end of October. That puts counties that are on a 12/1 fiscal in a pinch. You have no idea what your renewal rate's going to be from Blue Cross, United Healthcare, Aetna, whatever, until most times well into the month of October, which we all know puts you gentlemen in a bad spot for trying to budget for next year. That's where I'm proud as punch. Hope Trust issues the rates in August. We put those rates out there. So you can already take those and plug those into your budget. The fact that Blue Cross won't give you their rates now and make them firm, United Healthcare, that's on them. I would hope you see, please don't make that a negative on us. We go above and beyond and give you your rates we already have. We gave them previously. But they are never going to get rates until you get into the month of October. Not any of the ones we've worked with. Mr. Ross, maybe you've known some different ones, but normally they want 9 months of history before they're going to issue a renewal increase. If you're a company that has 20,000 employees, maybe they make an exception. The groups we work with that have 100 to 1,000 employees, no, Aetna, Blue Cross, they're not going to, roll out the red carpet and issue rates 5 months out like we tried to do. So another big advantage I'd like to point out with the Hope Trust is we arm you folks with that information much earlier than you're ever going to get with a fully insured carrier. I know I'm on my soapbox with if you have a bad year, expect the 20s to 40s. That's what you see. That's bad enough. That does happen. That's a reality. It's not me trying to scare anybody. That's a reality when entities have a bad year. But what adds insult to injury, imagine being the county and finding that out on the 15th of October. I mean, that shoots your whole budget process to heck. And we're the opposite of that. We work with you folks on the front end.
Sorry. Okay, you got more?
Well, at some point, if you could just go back to Jim's role, just.
Oh, I'm sorry.
But
Yeah.
if you're
Yep.
on the same topic, Lance, go ahead.
No, it was regarding the current year's estimate.
Right. So every member, when I say member, it's every county, city, village, public entity that's a member of the Hope Trust. They all get a position on the board of directors. So currently we have, 30 some members of the board of directors. As you can imagine, there are many people that don't have the time or the resources to make an additional 4 to 5 in-person meetings a year to go over some of the decisions that need made on at least a quarterly basis on where we're currently at and where we're going in the future. So the members of the board of directors, those 30 some, they elect amongst themselves, similar to how a county board would elect a chair, and then the chair would select who's going to serve on certain committees. Exact same analogy for the executive board. So the executive board members, they also happen to be a board member, no different than than an insurance committee chair is also a county board member, but it's just a role for men and women that have agreed to serve in a more active capacity, generally that can commit to attending, 4 to 6 in-person meetings a year, oftentimes, 3-hour plus drive from their home and everything. A lot of individuals, as you can imagine, they don't have the ability to do that. County board meetings keep them busy enough. School board meetings keep them busy enough. They're not all going to be willing to also go 4 to 5, 6 times a year to meet and go over Hope Trust stuff. So that executive board is kind of the filter for the group as a whole. Major changes have to go back to the association as a whole for a vote of the entire board of directors, all 30 some, before those are made. So your executive board is more on your quarterly management and that type of insight. Major changes generally on an annual basis we send back to the full board of directors to make.
But why does it have to be in person?
They're not all in person. We have, especially during the pandemic, I didn't even know the word Zoom before COVID came. We do have Zoom meetings, and in fact, most all of our executive board meetings, we offer that. Some of the members of the executive board participate more often than not in Zoom, but some individuals, even with Zoom, they still have a full-time career. Our meetings for the Hope Trust are generally during the day. As you folks would probably realize, there's board members that are great board members, and they can come to the night meetings. They're busy 7 to 5 during the day with a full-time, career, farm, whatever it is, similar to, the executive board. So some of them that do serve will Zoom in if necessary. But yeah, a lot of the standard board of directors just don't have the time, even if it is to Zoom, to take 3 or 4 hours out of their day to attend. So that's why the executive board does exist. And it's all for the initial founding documents of the Hope Trust is what said every member gets a seat on the board of directors, but the board of directors from within themselves will elect an executive board made up as a chairman, vice president, treasurer, secretary. So it all goes back to the founding documents of the intergovernmental risk pool.
Thank you.
You're welcome.
So, I mean, it looks like the logistics and the liability of leaving the Hope Trust would negate any financial benefit of going with a different carrier. You mentioned, and it might have been the other gentleman you mentioned, emailed, said there's a lot of different packages you guys can offer communities. Your note here says that 2026 assumes renewing with the current plan options, no changes. What's the window for us to look at our options for the 2026 year right now?
Generally, as far as plan design changes, I believe that Jason likes to have those in the month of October. I'm not going to say that we can't make an exception or so. I mean, we work with all of our members, but
And
normally...
Where can we see those options?
What's
Where
that, sir?
can we see those options?
Well, so I believe the county, and I will leave a copy and make sure, I believe you already have a PDF option of every plan that the Hope Trust has as far as deductibles and out-of-pocket. The reason we generally don't provide rates for every single plan every year is most all of our public entities are in the same boat. They work with they're working under multiple collective bargaining agreements. So a lot of times health benefits, it is no to minimal change that we can do to deductibles or out of pocket. So by default, we try to always just propose what you were previously at, because normally that's already satisfying all your collective bargaining agreements. But if there's ever a time where, let's say right now you're at a $500 deductible, you are entering into negotiations, or the union has agreed to open it up as long as you're going to work with them. Let's consider 1,000 deductible. At you folks' request, we're happy at any time to provide those other options. For this year, we did provide some options of a couple of different high deductible plans, and I believe Jason has previously emailed those, I believe, to the county clerk. If not, again, I have a hard copy I will leave here, and I can make sure we have a digital copy too. They are, again, higher deductibles, higher out of pocket. It's going to save the county on premium. It will be at the expense of the individuals, the members, their deductibles, co-pays, co-insurance, etc. But yeah, we can quote that every year if there's a specific. With the not quite 24 plans that we have, it would just probably be too much information, more than you folks would even want to know, and that's why we don't do it annually. But at any time, sir, if there's like I said, hey, we're at 500 deductible, could you run us at 1,000? What would the quote? We're happy to do that. That's not a problem whatsoever.
Well,
Really, like I said, the email, you guys should all have that in there.
okay, that's what I was just looking for.
Yes.
Today. You send it today.
No,
Yeah.
you're talking about the one with this.
Yes, yeah, I was saying that today, so I forwarded as soon as I got it.
I gave it to you guys. The paper clipped.
Could I just say, well,
So
there's an interruption.
that's the alternate.
This meeting was scheduled and posted for the annex building. I did just a quick count. I'm sure it's not accurate, but I think when we started, there was a little over 40 people here, including the committee and department heads and Hope Trust representatives. So we came over here at Walker's suggestion, so we'd have more room for everyone. Since we're in the upper courtroom, this is where we're set up to stream meetings, so we are streaming it. And I see that there are a few people at least that have said they're streaming and sharing the information. I want to apologize to those people. It wasn't planned that we would be in here today, and it wasn't planned that we would stream. There's a problem with the cameras. This system that we use is, if I understand it, the state actually uses it with the court system, and the cameras are not quite set right, especially on the committee itself. So there's nothing we can do about that, I'm told. We don't have access to that. The headless person that you've been looking at for the committee is Derek Ross. You can barely see Lance and you can't see Joey at all. But they are here. We're able to see the gentleman from Hope Trust very
I wish I
well.
hadn't sat here.
Me too. They can see me fine too. But anyway, I just wanted to mention that and apologize for the camera for those watching. Also, the committee was scheduled for 4, and I thought might go to 6 if need be. We've still got at least a half hour there. We do have the Building and Grounds Committee at 6, and then we have the Public Safety Committee at 7. So Walker, if need be, maybe we can think about delaying those a little bit. We'll see, but especially Public Grounds. Lance chairs Public Grounds, so we'll need to get on to it. But I will shut up so I don't keep wasting any more time. Just wanted to let people know those time constraints are coming into play.
Great. You have this, right?
Yes, sir.
So can you explain to me the 2021 and 2022 employer risk sharing payments? Specifically, those 2 years were our best performing years, minus the 89% loss ratio, and we only spent $90,000 or $48,000 compared to $300 to $400 to $500. what did we do different in those 2 years that would have benefited us so greatly that maybe we could look at doing that again?
I'm gonna have to get you an answer on that, because I don't have the raw data that made this up. I think it goes back to insurance. We're gonna have our good years and your bad years, and those are 2 good years as far as the risk sharing.
But the dollar amounts, I mean, we're $300,000 to $400,000 less, and I'm like,
So basically what I'm seeing is, as far as, total claims paid, were both lower those 2 years as well, and the risk sharing was lower those 2 years.
Okay.
I'm gonna have to get you an answer on that.
and I'm sorry if I'm being difficult about it, but that's why I want to continue. I want to see claims on an ongoing basis, because in that way, if we see we're hitting that 300,000 to 400,000, we know our renewal is going to be whatever. But if we see the 90, then we're like, okay, well, maybe we're going to have a good year this year. So that just didn't make any sense to me on why those 2 years were so significantly less than the others. So if you could ask somebody on that answer, I would appreciate it.
Yep.
And then secondly, I thought I remember seeing somewhere in the agreement, and you were talking about unions, that the unions actually, through a collective bargaining agreement, could separate themselves from our benefit. They could actually have their own plan. Either, I don't know if they could set it up independently through the Hope Trust and have 2, or if they end up going out and doing their own thing because they're like, we want these benefits, and the county's saying, well, we're not going to give all 100 employees the same benefits as a union, because not everybody's on the union. So I thought I remembered seeing that in the language, that we can have collective bargaining and break out those people in collective bargaining and put them under a separate plan than what the rest of the county does.
We do offer employers to pick multiple plan options. I don't recall if we mandatorily funnel certain groups of employees to those plans. I believe all of our employers that offer like a dual choice, it's voluntary for the employees to pick. Pike County has dual choice. I believe you folks have a standard deductible plan. You have the high deductible health plan paired with an HSA. I would have to follow up on if we allow, I wouldn't doubt that maybe your own collective bargaining agreements say something like that the unions, but I wasn't aware. I'd have to research the full joint self-insured risk pool agreement if it referenced that unions were able to
Basically carve them out.
to carve them out.
Yeah, so if they have their own plan with their own benefits, then that's one thing, and we carve the rest of the employees under our plan.
I know for certain the Hope Trust membership agreement does have language that allows for different type of regulatory mandates that an employer has, such as offering retirement benefits,
Right.
IMRF coverage continuation. That language could be also broad enough, and it might even reference the collective bargaining union agreements. I don't have the full plan document in front of me, but I can take a look at it and we can get you some guidance on that.
So to be clear, if we get in a situation with union negotiations and they say, we want this, we hopefully would be able to set up that benefit for them compared to this is what we do for everybody else.
I believe that might be possible.
Okay.
I know some of our plans that we offer, like the HRP, it's open to everyone. The employer doesn't get to choose, do I want to allow this person on the HRP or not? It's just part of the Hope Trust. It's built into it. So on your question, I'd want to get some clarification on that. What we do currently see is employers that offer multiple plans, and the employer chooses, a lot of times due to collective bargaining, rules that's in the contract. Hey, we're going to fund this plan to this level, and then the employer might pick another skinnier plan. Maybe they paid more towards the premium, maybe less, or maybe they keep the plan with the low out of pocket for non-union folks, and you folks might choose to fund a different amount to it. I mean, we see that very, very common. As far as can we mandate, I would want to get clarification on that. Can we allow an employer to say, this group of employees are eligible for this plan, but not this group of employees? I'd want to get clarification on that. I know you folks have full discretion on the rates you charge for your employees and their dependents, short of whatever's required in the collective bargaining agreement. That is for the county. The Hope Trust provides that's the rate for the plan. How you folks decide to break it up and cost share it, it's what I like to call it's county business. So,
Okay. Thank you.
yes, sir.
Guys got anything else? Walker, do you have any? Nope. Okay. I think that's all we, yes,
I'll
Kim?
take my seat over there. I'm still going to be available, or if they want me to stay for a question, or whatever, Mr. Chairman.
Yeah, a quick one, because I know go ahead.
I just was gonna see if somebody would speak to the other benefits that come with having a program that if this street benefits that help out with like jobs and training. There's just a lot of stuff you guys do that I think that people don't.
Yeah.
They can know about.
Well, and I don't know that that's going to be pertinent to what we've got going on right now, because we understand what the benefits are, and I have a feeling we're probably leaning one direction anyway, so I don't know that it would be needed, but
It's to know that the general public doesn't understand it, if the insurance program comes some other benefits, and maybe that can get into prime time, but that was just something that has been helpful for us. So it's been other positions that maybe lack more.
And it-
That it can get into the meeting.
yeah, I'm thinking that if we were comparing Blue Cross and this and said, well, they offer this, whatever, and just kind of vision, but I don't know what it would be, but I don't know that we definitely weren't going to plan on doing that today, comparing the two side by side in that instance. Yeah. Okay, so thank you. So we have a bid from Blue Cross Blue Shield. I don't see Glenn, so I went ahead and we also have an alternate bid from the Hope Trust with their ACA plan. They have two, what they're calling the traditional ACA Saver 1, and then the qualified high deductible health plan ACA 1. And so right now, we took about a 9% increase on our insurance premiums. I have the rates that we've calculated here. I have the two plans that are currently offered through the Hope Trust, and then I also have what the alternate plans were that the Hope Trust sent. And then I also have what was quoted for the Blue Cross Blue Shield. And so in comparing, so as an example, the current 700, 1,500 employees are paying $272 per month. The renewal would take that to $335 per month. Now that's just saying the entire increase, that whole 9%. We're not looking at what's the county going to contribute. I figured this as is the county's contributing exactly what they did last year. And then we can talk about this in finance and so forth to say, how are we going to adjust that? And then we can figure out what the per pay amounts are. But so for example, the 700, 1,500 was 272 for a single, went to 335 for a single. Going to the traditional, and it's a $5,000 plan with an 80/20 and an $8,000 out of pocket, it would drop them down to 164 a month. So right now, being a 700 or zero deductible, they're paying 272, and it would drop down to 164. A similar comparable plan with Blue Cross for a single was coming in at 128. So it was a little bit less expensive, but everything kind of gets shifted around, because then when you look at families, the renewal for that same plan is $1,345 for a family, but under Blue Cross, it's $1,672. So it kind of shifts depending on the demographics and the census information. But the key thing that I thought was interesting is when you get down to the qualified high deductible or the HSA plans. Currently, right now, employee only for a 5,000 QHDHP is $150 a month. The increase would take it to $252. Going to the $5,000 80/20 to an $8,000 out of pocket for the high deductible health plan drops it down to $93 a month. The $3,500 deductible, $5,500 out of pocket with Blue Cross would actually be free. So the employees wouldn't pay anything a month for that plan. There would be enough that the county would pay that they would cover the whole thing. When you get the family rate, currently right now it's $853 going to $1,004. Blue Cross would be at $779. So, you know, Blue Cross may win on one plan, but not on the other plan. And
Those current rates right now, that's not what their increase that will happen in 20 cents. Blue Cross, correct?
the rates that are being quoted through Blue Cross Blue Shield were underwritten for a September 1st. So those are underwritten numbers. And that they, from what I understand, have a max medical load to it. So in other words, they basically raised it as high as they could raise it and still coming in where it's coming in at. So there may, if we were to look at switching for a January 1 for them, my guess would be it's about 1% a month. So the rate difference between this and what would actually go into place January 1st may be an additional 2.5% to 3% more. But
Right, you're on hard numbers. You have hard numbers for Blue Trust and the Blue Cross, yes. We just have to guess it's gonna be 1%.
I'm going by trend, so
Can you just make sure it's not hard numbers that you're comparing?
it's an educated guess, yes.
It's next thing.
Yeah, yeah, so anyway. But the key thing that has been disconcerting about the whole evening here is, again, even if we were to try and save the employees money and switch them to a potentially different or less expensive plan, we still, as a county, have to pay for that runout or potentially a $500,000 bill, plus another 60 or 70,000 on top of that to buy the reinsurance. So when you compare what it really cost us for insurance, I don't know if you take that number and add it to what the Hope Trust is and what it costs us to be with them, or if we're supposed to say, well, that's really what it costs us to switch to another insurance company, so the other insurance company's premiums are that high. It's just a unique situation. It's a unique situation that we can't find a way to potentially insure our risk, so where we wouldn't maybe have to pay or obligate that $500,000. And I don't even understand how a county can be in a contract like that that has an open-ended risk to it. If we didn't buy the reinsurance and somebody has $1 million claim at the hospital, I think we get stuck with the whole $1 million. If somebody goes in December 25th and has a heart attack on Christmas and the bill doesn't hit our plan until January 5th, we're stuck with the whole thing unless we bought the reinsurance. That's a financial risk that I don't believe counties should be taking on. At least the size of ours. And it's somewhat frustrating that we are in a position like this. But as I said at a finance meeting, it's really, we need to determine as a county what we're willing to pay towards benefits. And then here are the rates that came in from the Hope Trust and the tentative rates from Blue Cross. Here's what it would look like on a per pay basis. The employees may be able to save some money and they may not, but definitely going to a higher deductible. With the traditional ACA plans that Mr. Booth had presented, those already are out there. They have been sent to the clerk's office. I can get what these per pay deductions or per month deduction amounts are, at least so we can start having a dialogue. They can start looking and seeing what the difference is in the benefits between what's currently offered and what these alternate rates that the Hope Trust gave us. But from a county standpoint, I haven't shifted any part of what the county's going to pay on that premium yet, because that hasn't been dealt with in budgeting, finance, or anything like that. So again, I'm going back to, I believe we roughly spend about $800,000 towards benefits, and that's what I'm figuring on paying towards this renewal at this point until we can sit down and work on the budget and see what that number would be. So.
What was the the individual deductible that Blue Cross Blue Shield plan was for employees out of pocket?
It was a $750 deductible on the Blue Cross.
$750. I thought it was like in the thousands. Out of pocket deductible that we would have to use for a week expenses.
So it was a $750 deductible, but the out-of-pocket was $4,500. So that's probably what you were seeing on the higher amount.
Does it cost that anything for providers? My understanding is this is Springfield that wants to take the cost. So do they provide where our coverage, I mean, where the coverage is? I mean, like Shutters, we get a very nice provider and standard list, so we know.
So you're trying to say the city, Springfield has nobody that has Blue Cross?
I'm sure that coverage, who we have right now is for providers, that Blue Cross and Shield are still in the same networks.
People would have to look that up.
Make a big difference.
I,
Employees we do use Springfield,
I have Blue Cross right now, and I'm accepted everywhere around this area, so I can't speak for them specifically, but
Springfield Clinic is not acceptable. Employees, so I'm just wondering how many others are needing.
That's actually something Chas just mentioned was that Blue Cross Blue Shield is very difficult to deal with a lot of the medical providers. So a lot of the medical providers are covered by Blue Cross Blue Shield that are local for us. So, and that might be something we need to know. I mean, obviously, I think you guys need to know that. Like, if they're not going to cover QMG and Blessing and Hannibal or Springfield, Jacksonville, and that's where everyone goes to those places, right? Like, okay, if we can't go to doctors, then this is pointless insurance too.
like I said, I can tell you QMG, Blessing, Hannibal, all those accept the Blue Cross currently.
I think we would need to have a preferred provider list.
Well, yeah, like I said, I don't have a list, but yeah,
Do we have that? That's what I'm saying. This-
I don't have a list, no.
and actually having a printed list, those can sometimes go obsolete on a weekly basis because providers are being contracted on a regular basis. I would suggest going to BCBSIL, so BlueCrossBlueShieldIL.com, and
I think that would be like, if you're looking at figuring out which one to go, which plan to go with, to have, these are the preferred providers at this point in time, these are the providers at this point in time, for two different recommendations or bids. And if one doesn't cover locals, even though they might be in a contract or a discussion of it, to me, I think it's a moot point to switch that.
I don't understand what you're asking. Yeah, I mean, I'm not going to take the responsibility to try and compare if your doctor's in one plan to the other. So that's that. What's that?
Discussing to change all this, but you're not going to put in the effort to help the employees.
What we,
Make sure you pick a plan that covers.
all right, here, hang on. So here we are. We're talking about prices, and we're talking about the rates that have come in from quotes. Okay?
Why don't you pick a plan that doesn't provide.
All right, I'm going to control the meeting here, and I'm telling you what we're discussing are the prices for the quotes. Okay? The county is going to look at potentially spending what they're going to spend, and we're trying to give the employees the opportunity to look at something that may be less expensive. If you determine that your provider is not in the less expensive plan, then I would believe the employees are going to say, we don't want to switch. And that's fine. If you want to go ahead and spend an extra $150 a month to stay with what you've got right now because the providers aren't in the Blue Cross plan or whatever it is, that of course is your prerogative. And that's what we're trying to give is the employees more choice. The employees can decide, I want to pay extra amount of money to stay where I'm at in order to be able to have what I've got. And we just went out to try and get some bids to say there may be something less expensive. But for the county, from the county standpoint, if we switch, I don't have anything built into this that it saves the county any money. I mean, I'm putting the same amount of money being spent for next year as was last year. We were just trying to throw some rates together to say there may be something less expensive for employees. And if the employees choose not to do that and say we want to stay with the Hope Trust, and the county's not going to spend any more than it did, why would we care?
How are you going to get that response from all of the employees that we don't want to switch if you are going to vote on this at the county board meeting? Or if you make a recommendation?
Well, I mean, I think you guys can kind of read through the lines here, but the Hope Trust trap has us trapped. So I don't see how we're supposed to sit there and spend $60,000 to $70,000 and $500,000 in claims. So personally, I wouldn't be recommending that we'll probably switch. Because
You're going to recommend that you want to switch or not to switch?
to not switch, I can't impose that liability to the county. First of all, it's open-ended. We have no idea how much it's really going to cost. Secondly, we are in a budget crisis right now, so I don't want to sit there and obligate the county on a what if.
Right.
But
My question was though that how are you going to find out from the employees before you voted on switching or not? Let's say there wasn't a liability. How are you going to find out from the employees if they wanted to switch or not? If you voted, we're going to switch.
well, in a perfect world, we would have had our Hope Trust renewal when we had our original bid, and we would have had this information sent out to the employees about a month in advance, and the employees would have had the opportunity to look at everything and figure out what they wanted to do, either a Survey Monkey or something like that. I really, truly was trying to put this in the hands of the employees to say, there are potentially alternatives. What do you want to have taken out of your check? And give you the opportunity to look at what providers there are, look at what benefits there would be, try and compare the two, because I'm trying to take this out of the hands of the county. The county doesn't get the health benefit, the employees do. It's the employees that benefit from it, so they really should be the ones to kind of decide, here's where we want to be. But the county still has to maintain its cost. So that's where it was. This was a service and a benefit for hopefully the employees to look at and say, there may be something else out there that may be less expensive. So,
I appreciate looking at options. I think one of the problems that we're always gonna face in this situation is the timing of it all. We always face the situation of the budget's due by a certain time, when they're willing to give their bids or tell us their renewal is always around this time of year, and we end up in the same situation.
absolutely.
So I don't know how to get there quicker. It's not that I don't think anyone's not willing to look at options. I just think that it's kind of the rush time of it. And then also, you know, if Mr. Cooley, who I think is a great man, but like, if he's gonna give us a bid and it's only for, you know, for September 1st of 2025, for the rest of 2025, like she was saying, yeah, all you can do is really try to make a quick guess estimate for what it's gonna be in 2026. Then we also feel comfortable because we don't really know what it actually is for 2026. And again, I go back to this time, you know, like we have to do our budget in this time of year. We're on that
Lynn?
fiscal year of December 1st.
We're just gonna move it here, okay?
Yeah.
So that's where, and I'm like, I don't wanna, like, it's not about getting, like, we're not trying to compete about it. And it's not that we don't appreciate options. It's just, like I said, like, the way it kind of comes down to it.
Well,
it's difficult to make.
yeah. I received the Hope Trust renewal yesterday morning. I threw the numbers together for, and we're supposed to have a meeting next Monday to let them know by the end of the month. And this is an every year thing. And I think that is what Ms. Hoskins was talking about is, can we get the Hope Trust to say, can we do a 60-day instead of 120-day? Like,
But it's the same thing with the bidding and stuff like that too, with the other insurance. Like we dealt with this years ago. Similar situation, trying to decide if we're gonna look at other insurances, and it always comes down to this time of year. And that's the problem, I think. It just, we can't ever get the information early enough in a year, or like, hey, what's it gonna be for 2026 and know it in March. So we actually have time to think about it and look at it. And it's true with the regular insurance. So
Right.
that's the problem. It's not just these guys, it's everyone.
Okay. All right, so recommendation to the full board on a choice of insurance company to go with. I mean, in light of understanding what our pitfalls are, I can in all good consciousness say that the Blue Cross is an option for this year, but I don't know if the rest agree or not.
No, I think, like I said earlier, I think the exiting the Hope Trust and the liability that comes with that kind of negates any financial savings that would be gained by going with a different provider.
Okay. Mr. Snedeker, I believe when I was on the health insurance committee years ago, I understood that we implemented an HRA to where we had a higher deductible and then the employee paid up to a certain amount of the deductible and we picked up the difference after that. Is that still a potential option? Does the Hope Trust administer HRAs internally within the plan?
That's similar to the cost sharing you currently have and that you've used in years past. It's essentially an HRA where the county is wanting to accept an additional layer of risk. The plan we give the member is still the $500 or $750 plan. It's just the county is willing to accept a layer of risk above that $750, let's say, up to $5,000 per month. It's essentially what it would be an HRA, but yes, we have members who do cost sharing.
Right, okay, so, and I've seen that in your traditional plans. I'm looking at your new ACA plans, the $5,000 deductible for the or the HSA plan and your traditional. I'm wondering, I mean, those don't have copays or anything like that. Everything's going towards the deductible. And I was wondering, instead of the full $5,000, if the county said, we'll do some cost sharing with you, you only pay the first $2,500, we'll pick up the next $2,500. Can you administer that HRA internally? I mean, we can get a TPA to do it, but that, of course, is an option to say, pay the lower premium for the higher deductible, and then us mini self-fund the HRA in order to. So instead of the.
No, I understand what you're saying. We found it's a better way to pick the plan that you want the employees to have, and then you folks decide how much layer of risk versus picking a plan with twice the deductible that you really wanted to have. We can do what you want, but it would not be done in that way. Those get very, very messy. We can work with you on that and do in essence the same thing, but it would not be the way that I believe you're currently thinking. It would get the same job done
Well,
with a cost share.
Well,
we currently do something pretty much that, I think.
So specifically the price. If you were to administer that in whatever way we decide, if it's a, you know, 4,000, 1,000, 2,500, 25, whatever it is, would the premium stay the same that you've already quoted us? So we're going to elect that plan. We want it ran this way. Does the premium hold? Because we elected that plan, but we're needing you to administer it to where the county will take part of the risk of the deductible. So it's not one of your traditional ones. I didn't see a 2,500, 2,500. So I'm looking at what's our least expensive plan to take and what do we need to self-fund in order to try and make the employees a little whole or more whole towards that.
I would need to actually.
That's fine.
To crunch some numbers and get back to you. I think one thing to keep in mind, just about any options you look at is the ACA style plans do not waive the out-of-pocket for preferred providers like all others do. So I want to be transparent for the employees to realize that too, because they realize right now, even if you have a $750 deductible plan, they know if they go to QMG or Blessing or Springfield Clinic, they essentially don't have a deductible. They don't have a max out of pocket. That all gets waived. So I know in the back of their minds, they're keeping all that in mind. We would just need to consider that if we move to a plan, that's gonna shoulder a lot of the costs on them. I realize employers and employees and their bargaining units negotiate all the time. That would be something we definitely want to make transparent on those newer ACA plans. There's no waiving of the employee cost sharing on the preferred providers. All of our others do. So in essence, when you're talking Blue Cross comparison, Hope Trust 750, Blue Cross quoted to 750, if you were just comparing premium differences, that's not accurate because Blue Cross doesn't waive any of that deductible for any tier of their providers. We waive it for roughly 3/4 of our providers, our preferred providers. So the employee only has that $750 deductible if they don't go to a preferred provider. So your local hospital, your local providers, your preferred, it's just something to keep in mind too. Regardless if you're comparing Hope Trust and Blue Cross or Hope Trust and one of the quote ACA plans, you can actually see in the PDF document, you will see that the preferred provider out of the cost is not waived on those style plans. So something to keep in mind.
Right.
And 100% of the cost share goes to the employees on those.
So would it be accurate if once they meet their deductible, it would make more sense for them to go to one of the standard providers
No, not
at
at all.
0%?
Not at all. Our rates are, they're a preferred provider for a reason. They have entered into.
I was just confused about the 20% versus 0% on the cost sharing on the chart.
Sure, but no, it would always make sense to go to a preferred provider regardless of what plan you're on. I just want to point out that employee cost share is going to be much higher on a Blue Cross plan because they don't waive that $750. They don't waive up to max out of pocket. We waive all of that. But it would be the case with some of our newer ACA options. Yes, they are lower in premium, but that's because there is higher financial responsibility on employees. So again, Mr. Ross, we're happy to work with the county on what ultimately type of plan you want. I can have you some numbers. We're happy to give you folks some answers on you pick. If there's a better plan, if you feel better suited for your organization, we're happy to work with you.
Okay.
And I apologize.
It's not the whole crowd. I can assure everyone in this room.
Can I just interrupt again? It's 6:01. Building and Grounds Committee was to start at 6 in the Annex Building. We're going to have that meeting here. Walker took care of posting the location change.
Well, great.
And Lance chairs it, and I see Tom and Mark, so we're ready to go as soon as insurance has finished, and we'll keep the streaming going from one committee to the next. So just wanted folks to know that. If you are here only for insurance and don't intend to stay, if you could take any extra conversations outside when this meeting concludes. Thanks very much. Sorry, Derek.
Yeah, that's fine. I mean, just going down, I think we're going to be in agreement here that we'll be recommending that we renew or at least stay with the Hope Trust. Not quite sure what plan we're choosing yet, but at least that's the thought. I have on here to set up the next insurance meeting to discuss health plan selections and deduction amounts, but I'll have to table that for now because I don't know. I'd like to get these rates out so people can see what they are, see what that alternate plan is, maybe get some feedback from the employees that say, maybe that's just too much. Let's look at one of the other 10 options that the Hope Trust offers, and then we can figure out what the deductions would be for that. We were just crunched for time yesterday. I'd asked for alternate rates, but we just couldn't get them done that fast, so which is fine. We'll get it done. All right, so then moving down, I mean, from press and visitors, I mean, we've kind of got some questions answered, but I think I think what you guys were generally wanting to know is, are we looking at switching or not? And I don't see that that would be the case at this point. Not that we wouldn't reserve the right to look at it again next year. It may be an annual thing, who knows? But at this point, it doesn't seem feasibly or financially sensible for us to take that obligation or risk. So that would be what I'll put as our recommendation to the full board on Monday.
Do you need a motion on that, or are we? I'll ask you guys.
Mr. Filbert, would you?
It's just a recommendation.
Yeah, the full board will still vote. All right, I'll cover it at the minutes. So then back to press and visitors. All right, thank you. I would entertain a motion to adjourn. So Joe, Lance, any discussion? All those in favor say aye. Aye. Those opposed?
Continue to do is just being up the next year and figure out what we can share some of the costs. Yeah, so whatever plan that is, I don't know.
Right, but we just,
That needs to happen. We need to take a step.
Just because my meeting adjourned.
just Lance, how are you coming along with the hail damage? One night, see any claims or anything got paid out as Teddy or anybody started working on it?
Nothing on my agenda here.
We're streaming, remember? We're streaming, remember? I think it's fine. Is there anything I can do? I think maybe Tom's got a little.
Looks like
You take it off. You take it off.
All right, I'm going to go ahead and call this meeting of the Building and Grounds Committee to order, just because we're already behind schedule. Thank you, Tom. It's probably going to take longer than the meeting to go through the bills. No problem.
Gas or the gas water bill was $197.5,
Okay.
and bills were $20,612.82.
The total was,
That's without the water.
okay.
So wait, no, I take it back.
Yeah,
That's total. That's
yeah.
total. That's total.
Okay.
That's got the water in it.
Okay. We'll move the approval and payment of bills to the last item. We'll skip that for now. Old business, the annex roof has been finished. We need to do a final payment approval for the remaining 43,000 and change. I believe that bill is in there.
Just to clarify, that's out of liability fund, right?
Correct.
And we need to make sure that it's listed as payout of liability.
Did you
Yes.
say 40,000?
There's 43,000 and change.
It's not on.
It's not listed on there.
So, I'll make a motion to send it to the full board for approval to pay the final bill for that.
Okay.
I'll second, with one more statement. They left some, I think Peters Heating and Cooling left some kind of construction material beside
Okay.
the annex,
Clean it up.
and it's on a pallet, and they've been called several times, and it's kind of a hazard for people walking in from the parking lot. So hopefully it's gone pretty quick, but they've been notified several times.
Here is the bill.
And
Yes.
Mr. Petty also notified them too.
The balance is $63,550.
We approved a $20,000 payment out of that.
That's it at $43,550, right?
43,
43,550.
43.
Does that say liability on
This is just from Petty Construction.
Yeah.
But yeah, I need to make sure.
Do you mind
It noted that it is for liability insurance.
there? Yeah.
It won't pick up if you guys want.
Hey, Sheriff. The insurance claims, did we get a final estimate on this building?
No, I don't think we have it.
Haven't got anything back from that. Okay, I knew I hadn't seen anything come through, so,
We're waiting on numbers for the air conditioning.
okay,
And gosh, we got it 3 weeks ago, a month ago.
okay.
I can reach out.
Yeah, if you could reach out and find out, because I want to get this, it would ideally, before winter time, we'd try to get some movement on these roofs, but
Yeah.
might not happen, I don't know.
And there was a hail damage.
Okay. Okay. Yes, that'd be good. And then the property PMs, do you feel like those are going well with,
Yeah, I gave that to Shane. He's looking at what we
Do we need to,
okay,
do we need to write on here 20,000 already been paid?
I don't know, probably was it in that statement there? I read it, but I read it real quick.
Yeah, there's, let's see,
Moving
last
forward.
installment invoice sent, but not received as of So they don't know it, so that's minus 20.
Minus one, yeah, so what'll be going to the full board is the 43,550.
Okay. So Sheriff Greenwood's going to follow up about the insurance claims. Property PMs are ongoing. Any other old business either of you have to bring up?
No, sir.
Somewhere in there, we're gonna talk about the jail.
Yeah, I have that on the new
Okay,
business.
okay.
Okay, moving on to new business. Sheriff Greenwood brought it to our attention that we were having quite a bit of limbs being dropped in the square. I don't know how we wanted to address that. Obviously, our maintenance budget, I looked at it, was about 89% used for this year. When you couple that with the fact that our financial situation's pretty tight, I didn't know what's your opinion on moving forward with a tree trimming
Is
bid at
Mr.
this
Walker,
time?
is Mr. Walker here? Did he leave?
He left.
I'd like to have his opinion, since it's I mean, I know, just like the building grounds, anything we spend out of building grounds is gonna come out of the general fund.
Yes.
Okay, well, if we're having trouble making payroll, we need to really watch what we're doing here.
Yes, and I agree.
So, since it is a liability risk, and that, I would assume that would be probably under 5,000.
The quote you sent was,
5,950.
yeah,
Okay. I don't see how we can't not do that, but maybe that could be a liability insurance thing too.
yeah, and I agree. That was what I was going to propose this week.
Yeah.
And if we want to send that to the full board, since we're kind of getting out of our budget and putting
Yes.
it on a bigger budget, we can
Yes.
do it that way too.
100%.
Okay.
Who was that through?
It's through ProCare Tree Service.
Did we look at anybody else, just for comparison?
No.
Okay. I'm just asking, Dave.
So I would make a motion that we send that to full board for approval
Okay.
to be paid out of liability insurance pending state's attorney's opinion,
I'll second.
something to that effect.
Pending. Okay, all in favor?
Aye.
I've got a couple things with Walker for the agenda next time. I could just send him a note on that so he's prepared.
Yeah, I
Not
just,
it
yeah,
on the
send it to
phone.
him, that way he can maybe have an answer for us even prior to the meetings
Yeah.
Monday night, so.
Okay, and then, so the next item on new business is the jail maintenance, the plumbing. I think we're all aware of the issues that are going on there. It once again comes down to a funding issue. Do we know, are we at the point where we're losing federal inmates at this point, or any of that?
No,
From the
it's
issue.
just a matter of complaint.
Yeah,
And we get this, believe it, we get
I can imagine.
complaints. Daily, I'm sure you guys receive them. Somebody doesn't get what they think they should get, or be
Yeah.
claiming applicants, family contacts there. Attorneys contacts.
You familiar with that, Tom?
Absolutely.
But I'll tell you, this sounds silly, but we have inmates here that probably ill if they get a lunch. I'm dead serious.
Mm-hmm.
They will choose to come here because they have one the other day instead of the street keep back around.
Yeah.
So, it sounds silly, but that's the truth.
I don't remember if you sent out what that cost was gonna be. Do you remember the repairs on the plumbing?
I don't know if I forwarded that email to
I
you or
think you
not.
did, but I couldn't remember the cost. I didn't know if somebody knew it offhand.
I don't remember ever seeing any figures.
Dan Brennicky.
I don't remember if Dan sent out a quote or if he just said we was having issues. I can't remember.
He said there was a quote with it.
So inmates get to choose?
No, they don't even, well, yeah, so, in that system, yeah, they can, through their attorneys, they can choose,
I think,
they can put in their opinion.
I think this one was already taken care of. This was 4,000. That's not the one. It was
That was the
higher.
one prior to
That was the
that
toilet.
Yeah,
Um,
I couldn't remember if it was,
Yeah.
I
maybe.
remember Dan sending the email.
Maybe it
but-
is this for, it's at $4,079 is the one that we're discussing right now. I thought there was multiple items on there that made it quite a bit higher. Oh, it is. I just had to scroll down more. So the initial
Thank you.
6 Metacraft pot assemblies, lavatories, toilet flush, bubbler, push button was $4,079.18. And then to do the larger project of bringing everything up to plumbing code, rebuild toilet flush valves, sinks. Basically, I think that's the one they said is gonna involve some busting out some concrete and getting in there and doing some plumbing and then putting these new specific type of toilets in.
Yeah, I'll have to check whether that needs to be done now or not, so that, you know, later.
But that total,
I'll check on that.
okay, that total was $10,620.
So our biggest issue is running water
Right.
for them to be able to have this in their sinks and the toilets.
Yeah, working toilets.
I mean,
If we're not losing revenue and we're coming close to the end of the fiscal year, we can budget that as an expense in building grounds, budget that in and levy for it and, get our ducks in a row. And
Yeah.
that could be our first project.
Yeah, and that's kind of what I want to know. Are we at that point? Like, what's our capacity at and are we?
I just don't want to lose that revenue.
No.
But as long as we can hold off,
Yeah, as long as we have, the hot and cold water and showers and toilets work, it's fine, it's just windows cease working.
I mean, you could make a case for a liability fund, but we can't. We shorted it 400,000
Right.
Yeah.
at the beginning of this year, and we're gonna have to fund that next year.
we don't want to
We
dig it
don't-
in a hole.
Yeah, we don't want to dig it.
And I don't think it, yeah.
You gonna push it off till next month, and I can use some of these answers.
I think so. But like when it comes to the liability, I think the liability is not it's a chronic liability. It's not that acute liability
Yeah.
that we got. It's like we're not worried about a tree branch falling on somebody's head at the jail or somebody getting injured necessarily because the
And we're
plumbing is not quite.
And we're not overcrowded where it has to be.
Yeah, there's not a health risk. There's
If it
not.
was overcrowded, I'd say
Yeah, so
we'd have to do it.
Right now, of course, there are certain ones we've got to keep separate, especially the federal system, but, we probably have room to move somebody if the cell came up,
okay,
it's not working.
okay. Well, like
As long as we can do that and keep the feds happy and keep them off our back, hopefully we can push this off until next fiscal year.
And okay, so and that's kind of what I said in my email. So I just wanted to reiterate that in the meeting that if an emergency arises, of course we need to take care of it. As long as we're not in what we feel is a dire situation or emergency situation, I think we're all in agreement that we push it off until.
But in a bad situation, if it comes down to payroll or fixing toilets, I mean, that's what we're gonna have to look at.
Yeah, that's a no-brainer though to me.
So, next month I can have
Okay, yeah.
And
I think
if
we
it's
got-
something we can break down into smaller projects,
Yeah, I think the biggest thing is going to be, this quote was given in June. Is it going to be the same in January?
No, it won't
So,
be.
I mean, well, how much, yeah.
Prevailing wage kills us on that, but
Do we have to pay prevailing wage if it's under a certain dollar amount?
governmental, we have to pay prevailing wage.
I thought that was only if it was over like $80,000.
No, because the companies we have employees and they have to pay prevailing wage on it. It's, because I deal with the same thing over Griggsville, because I've got one guy that is a self-employed electrician. He doesn't have to pay prevailing wage or has to do prevailing wage because he is his own entity. But when you have like Damon's or Two Rivers or BK, it's prevailing wage. And dollar amount is,
you guys should hire.
Yeah.
We are the HVAC guys. Okay, so we'll address this. We'll put a note in to keep an eye on the situation, get an updated quote closer to the next fiscal year, or probably in November, so we can budget for what's going into the next fiscal year, and go from there. Okay, bills. Rita's got bills.
Sorry.
All right, that was the last item on my agenda.
Can I ask you a couple things? I may be behind on, but,
Yeah.
the explosion, that business, what about the cost on that? Oh,
I haven't seen anything come to the committee regarding any damage, so.
sorry. One more, part of your job is, I don't know the words to use, but like supervising the grounds in the building.
Yes. Little under,
Cheaper.
custodian.
Keeping the buildings and okay.
Have you ever had anything to do with the, animal control? And I know we don't own that building.
Now, city owns the building. On that part of it, we just occupy it.
But one thing I wonder about, and it's probably, nickels and dimes for your budget, but, we're at the point of nickels and dimes almost. This pest control, it came up in finance that the animal control is paying two different pest control companies.
I think that was supposed to be stopped.
I don't know that it has,
I think that was supposed to be stopped.
and combined into one.
Yeah,
They
one of them was
kind of
supposed
said
to be
maybe they
stopped.
thought one was outside and one was inside.
Shouldn't matter.
Well,
I don't know anybody who just does interior or
No.
exterior.
I mean, unless it comes down to that they can't spray a certain thing, but most companies will be able to spray from A to Z. I mean, so,
And then I saw bills for Evergreen.
is
Yeah.
that Evergreen that does the spray?
Yeah.
Yeah, indoor and outdoor.
I just
I was
wondered,
led to believe that would be resolved immediately.
well, I'm sure it
Couple
wasn't
months
immediate.
ago.
Well, of course, we get bills late, so
Well, I would just,
I'll watch. and
I was
see
gonna say, I
if
would just
there's-
call out and talk
if
to
there's any-
Lotus and ask them. It's a simple way to solve that issue, just call and ask them and say, hey, are we still paying two or are we paying one? And if we're paying two, we need to strike one. As long as that company can do exactly what combined can do.
And I wondered too if there was any, savings to having them have one contact, but I think they pay per building probably.
Yeah, I'm surprised the county could.
Yeah. I'll check at finance and make sure it's not still going. Thank you, that's all I wanted to ask.
I have a quick question.
Yes.
So the hail damage, we had damage to, roof over the sheriff's office yesterday. Basically, we had 80% of the shingles already restored. Is there a time frame where we can look, we received already funding for that from the sheriff's office?
I do believe there was a claim received for the damage, yes. The only thing that wasn't part of that received was this roof. We haven't received anything on this roof, so yeah, I would say we could go ahead and release a bid for all other buildings. I want, the reason I was holding off, because I was wanting to get a bid for all of them from one contractor. Maybe that's not feasible, I don't know.
So two things I'd like to say, my guy, I think I mentioned before, is Eddie Construction.
Yes.
They got us the 80% of our shingles 2 years ago.
It was a warranty. Yep.
delved into that. And got that. So if some consideration could be made, some offer to them on that building over there, that would be fair.
I'd say definitely.
And then, Morton, I reached out to one building, you guys, Morton. Come
Put it in here.
I don't know if I haven't seen anything from them yet, but because of the warranty, we have another contractor outside of Morton. So, and Bill pays when that. It's fair, I'm sure you.
Yeah.
So, so I reached out to Morton, they said, yes, so the guy, from Morton went, he looked at it, did his measurements, and said he would get something to us. I haven't received it. I wasn't sure.
We have a meeting in about 30 minutes with Casey, so I'll just ask him if he had heard, if he's heard anything, and if he has, I'll have him either get a hold of you or I will text you.
Okay, I think Casey was in contact with him.
Okay. The roof on the jail, I mean, it's gonna be over the amount that we have to probably do for, bids, so you might as well go ahead and get a couple of quick bids, on it.
I'll reach out to a couple of companies.
Just for something, I mean, we've gotta have the bids because of the threshold, but,
It'd be nice to get them before we're.
Yes.
yeah, I mean, yeah, and, I mean, we're looking, we still got a couple months, roof wise, where I feel comfortable that we got enough heat to stick the shingles and stuff, the roof, but if you can have that by next meeting, I think we'll be good on that day.
Why don't we just release a bid packet with each building already itemized on it? That way we can get them all back from the contractors, and then if we get it where it's gonna be too much for one contractor, they can bid certain roofs. I can either provide that, or do you have is that something?
I don't.
I figured just take what we received from our insurance company as far as claims that were paid out, list them each on a list on the bid that we release, and they can submit their bid per building, and then we don't have to award all bids to one contractor or another. We can award them just by bid.
Yeah, because there might be one that's a lot cheaper on this building versus.
Yeah. Well, I was thinking just time constraints. You line them all up. And
Yep, exactly.
might not work,
That too.
so.
But you don't want the numbers on
The numbers,
the insurances.
No,
the insurance payouts. I don't think we want to put that
no,
on there.
we don't,
No.
because
Yeah.
they'll max them.
I think we just do an open bid and make it due before next month's building and grounds. That way we can approve it.
Yep, I agree.
This burns me up every time. The cone elevator maintenance just kills me.
Contract for.
Kills me. I'm gonna
Yep.
teach my kids how to work on elevators. Okay, so do I have a motion to release bids? It's not on the agenda. Do we have to wait till the main meeting to make that
Well,
motion?
I think we'll just take care of the bid side
Yeah,
of it,
he has the-
and he can bring it back to us
Okay.
at our next meeting,
Okay.
as long as
Or
we
you
know
could
exactly
send
what
it
we
to the
want.
full board if you want to
I mean,
make it.
I think Dave has the authority to go
We
out. for
really,
bids.
we don't need to,
It's not like we're not spending money, so it's,
yeah.
I think
He's
you
just gonna we're just gonna give him the authority to get the bids, and then we'll go with that next month.
good on that. I'm good on that, appreciate it. Looking for a motion to approve $20,415.77 in unpaid bills, $197.05 in paid bills, for a total of $20,612.82.
Is that including the 40 for the roof?
That is going
That is
to
a
the,
separate.
that's going to the full board for approval since it's not on our list.
Okay.
Yes, I'll make it.
Okay,
I'll second.
all in favor?
All right.
All right, any other comments?
Motion to adjourn.
Motion to adjourn, Tom,
Second.
second Mark, all in favor?
Right?
Meeting adjourned. It is 6:29.
Being who you are.
Oh,
I'm gonna submit you for that Daisy Award over in Bridgeville. It is looking nice when you drive through there.
I try to keep it up.
You do a good job.
A lot of road work left to do before the fall.
There you go.